Today we're grading Microsoft across fundamentals, technical indicators, and relative valuation. At the end, we'll assign a final letter grade and explain what it means for investors. First up, fundamentals. These grades measure the strength of Microsoft's business, its growth, margins, balance sheet, cash flow, efficiency, moat, and future drivers. Microsoft's revenue grew 15% over the past year, slightly above the software industry average of approximately 14%. Cloud and AI services are growing much faster than the market, but Microsoft's overall growth is slower than smaller SaaS firms that expand 25 to 30% annually. Gross margin is 68.8%, a bit below SaaS peers at 74%. But with operating margin of 45% and net margin of 36%, Microsoft is one of the most profitable large-cap companies in the world. Microsoft holds over $95 billion in cash and has low debt. This war chest lets it invest in AI, buy companies like Activision, and still reward shareholders. Microsoft generates $80 billion plus in free cash flow each year. This funds dividends, buybacks, and new investments while still growing its reserves. With return on equity above 35% and return on invested capital near 30%, Microsoft uses shareholder money very efficiently. Every dollar invested creates strong returns. Products like Windows, Office, Azure, LinkedIn, Xbox, and GitHub form a sticky ecosystem. High switching costs and global brand trust create one of the strongest moats in tech. AI Copilot, Azure Hyperscale Cloud, Gaming, and LinkedIn. Microsoft is positioned across all the key growth vectors driving tech for the next decade. Microsoft scores an overall fundamentals grade of A. Next, technical indicators, the short-term signals traders watch on the stock chart. RSI below 40 signals oversold territory, often a sign of potential rebound. Recent bearish crossover suggests short-term downward momentum. Below 20 and 50-day averages, above 200-day. Weak near-term, but long-term uptrend intact. Below 20, confirms oversold condition, often bullish short-term. Deeply negative, supports RSI, stochastic signals. Selling pressure stronger than buying. Traders cautious after recent highs. No extreme spikes. Stock remains relatively stable versus peers. Microsoft score an overall technicals grade of C+. Now, relative valuation, how expensive Microsoft looks compared to peers. Microsoft trades at 37 times earnings, compared to the S&P 500 average of 25. That's a premium investors pay for quality and growth. Looking ahead, Microsoft's forward P/E is 33.6. Still a premium versus Alphabet or Meta, but not extreme. Microsoft trades at 13 times sales, while the industry median is closer to 2 or 3. That's a very rich multiple. This multiple is also well above average, suggesting the stock isn't cheap on cash flow either. The PEG ratio adjusts valuation for growth. Anything above 2 is stretched, meaning Microsoft's growth doesn't fully justify the high multiple. High for software, but Microsoft's intangible assets make book value less important. This is relatively low compared to many peers, meaning investors are paying up for Microsoft's cash flows. Microsoft scores an overall valuation grade of B-. Here's how to read our grades. A, A+, exceptional, best in class. B+, B, strong, above average, but with weaknesses. C+, C, average, balanced, but with clear risks. D, weak, major issues. F, very poor, not investable. Putting it all together, fundamentals, A, technicals, C+, valuation, B, weighted most heavily toward fundamentals, Microsoft earns a composite score of 3.4 out of 4. That translates to a clear final grade of B+. Microsoft is still one of the highest quality companies in the market. But right now, the valuation is expensive, and the chart is weak. For long-term investors, it's still a buy and hold titan. For traders, patience might be better. This video is for information purposes only. It is not financial advice. Always do your own research before investing. This video does not suggest any action in terms of engaging in security trading of any sorts. Thank you for watching. Do not forget, like this video and subscribe.